Good day. This is the Elliott Wave weekly update for the NASDAQ 100 being recorded on Saturday, August the 31st, 2024. I'm going to start here on the daily chart. Excuse me, I need to do that. I keep being told. And where I'm beginning is that I am satisfied that we completed a minor third wave here, and that minor third wave is inside of an intermediate third wave, both going up. So the minor third completed, we're in a minor fourth wave. One count that I'm showing here on the NASDAQ on the cash market is that we are still within the minor fourth wave. And what we completed is minute wave A, and we remain within a minute B wave of that minor four. So it's going to be an A, B, C. So we're still within the four, and I'll go over that in more detail. The other count truly that I'm running side by side, and this is exactly where the market is at that decision period, where it's like, okay, we're going to go substantially above that high that we saw, just 20,600, I believe it is, somewhere in that area. Are we going to exceed that substantially? In which case, then the additional count that I'm running is that we have completed minor wave four, and that would be at this low, and we're in a minor fifth wave up, and that's going to consist of 5 waves of minute degree. And within that, very likely, we got 1, 2, 3, and this is 4, all minute now, and that we're in a minute fifth wave up to complete it. Now, what that fifth wave would really look like is one that got very kind of explosive, because we would be expecting the market to go up and go above 20,672. Now that's, again, I'm running 2. This is the second. And I'll review that in more detail when I do the futures, the NASDAQ future. Right now, let's go back and discuss the additional. And that suggests we're still in a 4, minor 4 here. And I know this is get confusing because really what we're working on is a minor fourth wave, maybe, under this view. But if it's complete, then we're going up in an intermediate, a minor fifth wave to complete intermediate wave 3, which brings us back down in a fourth. So we got a lot of these degrees. One's the minor smaller than the intermediate, but they're attached. So one completes, when we complete like the minor fifth wave up, it then finishes intermediate 3, we go back down. And we're going to likely go back to that same area that right now I'm representing as the minor fourth wave. So this would suggest, okay, we've come down in the A wave. We're going up in the B wave. The B wave, I believe we've done A, B, and we're in C of B, and that's going to consist of 5 waves, of which we've done 4. So we're waiting for and I think the fifth wave up has begun. Now, our first line of resistance comes in at 20,036. That could work, but that is actually where wave 5 on the smaller degree, wave 5 would be equal to wave 1, 20,036. Now that, again, could complete that fifth wave, and then on top of it, that B wave, and suggest we go lower, or the market then does reject this level and start to sell off again. And this time would then probably be expected under this count, if that's a B, to finish a C wave down. And then I would be looking for the market to get below 17,003, exactly here at 17,435. And to complete the move, the C wave, and then we would put minor 4 down here. Now here are our fibs. So we have 17,020, 17,254, 255. That basically has not been reached yet. So that would come up first. Then we have the low of that sequence, that fourth wave. That's at 16,973.74. And then we have the 50% retracement at 16,193. So wave C has room to be fairly strong right now. And it could happen very quickly. A lot of things coming up in the next couple of weeks that could change a narrative. So that's this particular count that I'm showing you here. So if we get up here and we get here, now the next line would be, again, the fifth wave extends, is 20,540, I'm going to call it, because I got two lines there between 35 and 39, so we'll call it 35 to 40. And that would be for C, and it also would be for the fifth wave. That's got a higher, a little bit one notch, maybe probability up. This would be first, and then this would be second. I would not necessarily be looking for this right now. But here we're getting closer to that it's an absolute flat. Still not quite, but very, very close. So, but still acceptable to be a B wave and then come down. Now, the higher we get to there, then the probability that this is where we're going to complete. If we complete here, well, the difference is going to be 600 points. And so if we go from here and you just take 600 off, you're down into this level. So, or even here, to be honest. So you can come down and equal the low. And that's if it got to here and decided to not. So again, that's the one view. Now, on the other hand, this actually still fits in terms of it's 1, 2, 3, and 4, because I just changed this and run it from here to here, and I'm going to do that over in the futures market. So let's go take a look at that. Now, here in the future, we are on the premise that minor wave 4 is complete, and what we're now going through is a minor fifth wave up to complete that intermediate wave 3. And now I will just take a quick trip out to the weekly chart so we can see what we're doing. Here is intermediate 1 and intermediate wave 2. So this is all intermediate wave 3, of which you can see 1, 2, 3, 4. We would be in minor wave 5 up. The expectation would be that we're going to clear and get above the current high, which is 20,983. Once we get above 20,984, we are in new all-time highs for this index, and depending on the structure, could be completing at 21,075, 22,270 to 75. That would be quite the push. And there are a couple of things that really could do it, and we have them coming up in the next couple of weeks leading up to the Fed, which is having a September meeting, of course, where they are expected to begin easing. So the market is making these adjustments. Now, we may get up there before the Fed meeting, and then the Fed meeting decides, we don't really like the numbers that came out. And so we're just going to hold off. We're going to hold off one more time. See, our purpose is, all of our goals remain the same, and we'll take a look at it again. Next month, it could happen. That's not the expectation of the market. So, and again, I feel it's more important to just trade what the technicals are telling us. Let the rest of it take care of itself. But if you're looking for what could be a catalyst in driving a third wave or driving a rejection of a particular level, would be some of these other things that come in. So right now, let's talk about where could the futures market go if minor wave 4 is complete. And you see that what we're completing on the top is an intermediate third wave. So again, we would, once we reach this high, expectation would be that we get above the current levels. So basically above 21,000. There's our first, 21,075. And if the structure was 1, 2, 3, 4, 5 to get ourselves up there, don't forget, we're sitting currently at 19,595. And we're looking like maybe we're going to go to 21,075. That's a pretty good, nice jump. That's about 600 points. So it would be a nice run. And then again, we'll look and see what the market's doing there. But those are expectations. So we're looking again. If we do have a level of 12,336, but that's not new highs. So, but it could be 5 or 3 maybe. My point is that I think that we need to, if this is going to be in effect, we need to really continue to rally pretty much from the Globex Open tomorrow in preparation. Now, again, here in the United States, Labor Day. And that's a holiday, it's a federal holiday. So the US markets, our regular trading hours will not, they'll be closed. We'll be closed for the day. So, but the Globex will run, I believe, Sunday it'll start, and then it runs until 10 a.m. Eastern on Monday morning. Then reopens again at 6 p.m. Eastern on Monday afternoon. So the markets will be trading, but not necessarily through our exchanges. Now, a lot can happen. And if we were to stop from here and just revert and really start to head down, I can't say that. I'll just take it to the 4-hour chart and go right in here so I can look. We may, this actually is very corrective like. This actually would be like a 1, 2, and right now it's that kind of threw it off, but they recovered it. So here, I'm okay, 1, 2, 3, 4, but the market should continue to rally. We need to clear all of this. So we need to break first above 19,700. Then we need to break above 19,900. And then eventually need to break above 20,000 again to get it going. That is not breaking that high. So that puts a lot of additional pressure on the other, both counts, to be honest with you. But that pressure would come from failure to get above there, pulls us into that it's an ABC and this is the B wave and we're done. Even if we only got up to here, and I can go A, B, 1, 2, 3, 4, 5. We only got up to here, it's still a B wave. But this level, this is what I'm talking about. If we get that rejection. So we race up, which is still a decent rally from where we are. We race up, we hit it, market rejects it, turns and really starts to just sell itself off pretty strongly. And it could be something else, could be the same news, who knows. But we start to decline, then it's likely a B wave and we're just going to start to drop. Those would be what I would be looking for. Now, here's how we've been fooled. This was, if you were there and you were watching it on this 4-hour chart, doesn't look like much when compared to like that. But it was kind of almost very quick, pause, quick, pause, quick. Close, that's what kept that, and then just start to buy it. So they would be consistent and just continue. More like this for sure. But from here, that initial would be a continuation. We do that, not maybe come up that far, not play around up here. Just continue, bounce, continue, bounce, continue. That's what I'm saying. That would be the B wave. Here, I'm looking for that to happen to the upside under the current look. And so that would mean we rise up. Here's the 4. This is 1, 2, and then we're going to go up in a third. Not very strong coming out of Friday. It was very benign is the word I would use. Just like non-event. Like, okay, what do you guys really want? And they wanted nothing more than just to close it right in that box. Because that's what they could deal with. All right. Now, here's the deal. If it is going to be this continuation of a minor 5th wave up, the market needs to get going. If it continues to break down and we slip below 19,140, it's going to truly lean the picture the other direction. And there was one additional below here. There was another support zone that was at 18,885, I believe. And that would be the deal breaker, even though this would still be in play. This is 18,558. And I'm talking about 18,008 up into here, kind of this low maybe. Yeah. Now, if we start breaking below 18,900, it's likely going to have some strength. And if it has any catalyst to go along with it, then we're looking at the B wave. So this is what I'm talking about, that the market's at that point where it's decision time. Now, also what we have seen is decisions reverse on a blink. Not when we were actually going through this. This is 4-hour chart, so this is several days, and it was very consistent. But you see the point that we're at? This kind of started the negative, moving into a negative gamma, but this is where it was registered negative, and it stayed negative. And then it kind of flopped around, and then when it got back up here, it went back into positive. So we're still within that positive level. But if we break, and my thoughts are here, if we break here, it should shift things back. In other words, maybe gamma goes negative. And if we're in a negative gamma atmosphere, it should produce additional selling, i.e. what we saw here. Now, if that level was up here, again, it's all calculated, but the level might be 19,500. I don't know. We'll have to wait and see. I mean, we're there now, and I believe where I could review those numbers after expiration, because don't forget, when we get into an expiration, a lot of gamma is released and sometimes volatility. So volatility in terms of it decreases, it just goes down. And it kind of did that Friday, right? Because we're 3-day holiday weekend. So a lot of reasons for vol to shift around. In any case, here we are. We're at that decision. If we remain in a positive gamma, then my feeling would be coming out of Friday's expiration, the weekly, that they maybe start to set up for the next week. And if it is risk on, then it could be risk on for a week for all I know, because they're using options that expire the following Friday. So we don't know any of the inner details, but we can go on where those levels would be. Because if it's going to be risk on, then I believe that the market will continue higher, but it'll walk itself up. And what I mean by that is we see it here. We saw it. This is that risk on trade. And this is actually putting the risk continuing to. When you see that it just walks, that's what I'm talking about. It might pull back, but it just does it and then moves. It's almost as if it didn't exist. And we can go to the hourly chart and they're even smaller. So that's what I'm talking about, the atmosphere and the trading. And I was a trader, when you're in there and you're trading the future and or options, then if you're understanding that they're selling volatility and buying calls and selling puts, well, the hedge is to buy the underlying. And then whatever's happening into the underlying, i.e. Apple, AMAT, AMD, etc., is going to be happening to the NASDAQ future. So there we have it. And so it's a self-fulfilling prophecy in my book. And the same thing about risk off. Risk off is just turning it around. Risk off, the markets can't seem to catch a bid. So we're heading lower, and then the pullback is small. And then the next slam down comes in. Way up, they walk in it higher. So the market runs out of sellers. And if you got to walk in and you got to buy that market, it's like, well, they all realize it. So they're going to like take it, just put a spread out there, widen the spread. Anyway, trading stuff. Back to the Elliott decision. If we start to fail from here, our first clue, of course, would be 19,140. As a day trader, you're going to want to look at that level. Even as a swing trader, you're going to want to look at that level that we are likely going to continue, at least as a day trader for probably until the next support level. And I will see that and then see what happens. A continuation throws it over back into a possibly a negative gamma atmosphere. All right, let's take a look. I'm going to go up to the daily. Let's take a look at the moving averages on the futures market. They are basically hanging by a thread for an upside. And you can look at this. This is the daily. The orangey one is the 50. These are EMAs, and the blue is the 20. They're both moving absolutely flat along with the 200, which is well below. So, but once the 20 were to come back, you can see what it did. Came back, crossed over, and then went flat because they didn't quite get what they were going to do. And this is giving it a slight upbeat to it, but basically flat. The market needs to go up to maintain this. A change in this does flip and trigger some algorithms. And so we will see it'll play up and down from here until a stronger decision is made. So you can almost think these as like maybe points of control. Buyers and sellers will continue to go in there depending on what their feeling is. Are we going to go up or we're going to go down? And eventually we'll find out. All right. Now, next week, in terms of, let's take a look and see what the theme will be economic-wise. So, of course, we have the holiday on Monday. On Tuesday, we're back to manufacturing. We're back to purchasing manager index. So we have the S&P final U.S. manufacturing. That's at 9:45. 10, we have construction spending. And 10 a.m., we also have ISM manufacturing. That's on Tuesday. For the week, we have a mixture. So we're back to some more important employment along with some PMIs. So, and then also bigger is the U.S. employment report next Friday. So that actually, yeah, there's a lot going on. That the unemployment rate maybe drops a little bit, a very little bit. Anything like 4.2, 4.3, 4.4 would not be a good thing. So we're looking for the unemployment to kind of just continue, which is going to bolster the Fed, or the narrative, I should say, the narrative with the Fed that they actually will cut. So that's it. And the next Elliott Wave daily update will be on Tuesday, the 3rd. Have a great weekend. Have a great holiday. Stay safe.